Hey there, welcome to The Realtor Edgar, your ultimate guide to everything real estate in the vibrant city of Las Vegas. Are you dreaming of a new home or curious about the latest market trends? You're in the right place. Now let's get on with this video. Right, what's up everybody? Thank you for joining us on this video. I have a guest speaker here, Sean Uyehara from Geneva Financials. We're going to go over a few things here about applying for a loan, interest rates, and a few other things that we're going to touch on here. Sean, any words you want to say?
Thanks for having me. Excited to talk about some of the probably most common questions we get asked every day. And I think some of these things are things that people get hung up on, and it causes them to not buy a house, or they become indecisive, with their home purchase. So hopefully we can
Definitely.
give some guidance, and just let people know that it's not that hard to buy a home.
No, it's not. And unfortunately, a lot of people are almost afraid to ask these questions. So sometimes I feel like when I have these conversations with some people, I have to drag it out of them. So that's why I wanted to address these questions on this video to kind of ease people into doing this. So, well, the first question I'm going to ask is the one that most people ask. Okay, what are the minimum requirements to apply for a loan?
It's a very simple process. The first thing that any lender will do is take a look at your credit. And that's one thing. Don't be too afraid to let the lender look at your credit report, because one of the biggest misconceptions we still have in this market or today is that a lot of buyers think that their statement that they get from their credit card is their credit report, or sometimes when they have a Credit Karma account, the algorithm and how your credit score is derived in the mortgage world is going to be different than what you get from any of those consumer facing websites. So yes, it's a good way to keep a pulse on your credit report, see if there's any fraud or inaccurate information. But if you're looking to buy a house, that is the first step. You have to let the lender look at your credit report, because that to me is probably the equivalent of going to a doctor and letting a doctor completely check you out. They're checking your heart rate, your blood pressure, your eyes, and everything else, because that lays the foundation for how you move forward. Because if there's things on your credit report that maybe you aren't aware of that's hurting your score, that's going to affect you qualifying for the mortgage. So if a lender doesn't truly have a good grasp of where you are today, it's very hard for them to give you advice going forward. They can give you advice, but it may not be accurate advice. So
Yeah, might
you
not
definitely want to
tailor to your
start with that.
situation.
Yeah. So
Definitely.
you definitely want to get that out of the way. And even when you pull your credit, an inquiry is worth maybe 10% of your credit score. So it's not going to take your score down 50 points or 100 points. I mean, maybe a couple of points, if that. There's so many other factors that make up your credit score, like the how long you've had your accounts open, so your account history. You're also looking at your balances, so your credit limit compared to how much you have owed on those credit cards. And I've always told people, if you go out and you charge up your credit card this afternoon, that's going to have a way bigger impact than me pulling your credit today.
Yeah,
So,
definitely.
it's just not having that fear. And I think that's always one of the first things people are hesitant. They're like, well, I don't want to pull my credit. But yet, like we were just talking about earlier, they'll go buy a car and let the dealer run their credit report 10 times. Or they'll
Correct.
go and
Yeah,
apply
been
for
there.
credit cards or whatever it is, right? I mean, you're buying a house. This is something that's going to help you and your family in the future. So it's a couple of points is not the end of the world. Once we pull your credit report, we'll send you a list of any documents that we'll need. And the most common things we're going to ask for are 1 month of pay stubs, 2 years of tax returns and W-2 forms, 2 months of bank statements, and a form of identification. So very simple. These are all things that you should have handy. And then once your lender gets that, any lender should be able to finish a pre-approval within 24 to 48 hours. If your lender is taking a week or longer, something's wrong. They either don't know what they're doing, or they just don't know what they're doing. There's no reason why anybody should
Yeah,
take a week
I agree.
to do a pre-approval. It's very easy to do. And at that point, the one thing I always stress, and the one thing that we do with our team, is we believe in strategies on how you finance your home. So there's not just one way that you can purchase a home or finance your home. There's multiple ways you can do it. And if your lender is not showing you two, three, four, five different ways on how you can finance your home, that to me is a red flag, because now they're just trying to throw you into one program to get you maybe so they can get a commission check. So you definitely want to ask your lender for options on how you can finance your property.
Yeah, and working, who you work with really does matter, and that's why I like to team up with you guys because of all the information you provide to our clients. We have a working relationship, and I really appreciate what you guys do for us.
Hey, right
Now,
back
as
at you,
far as
brother.
thank you, man. And so going back to credit, I know a lot of people when I have these conversations, they're like, "Oh, you know what? My credit is really bad." What are some things that would be considered bad credit? Like, because I've had people that say, "Oh, I have terrible credit," and you pull it up and it's like a 720, which is like, whoa. And then you have
Yep.
people that are like, I have excellent credit, and then they got like a 540. So elaborate a little on that. Like, what are the minimums just to even qualify for a loan? Obviously it is going to affect certain things of the loan, but at least so they can know and have an idea.
Minimum credit score is a 580, but exactly to your point is why we want to pull your credit, because I've had a tons of those conversations. Same thing. I just had a conversation today. A girl said, I've got bad credit, but yet she said she's got a 640. That's not bad credit. So I think everybody has their own perception as far as what is good and bad, but that's why I let the lender
Totally.
make that determination as far as, what you can qualify for. So for us, the lowest we can go to is a 580. However, we did just roll out a program that if you have no credit whatsoever, so we actually pull your report and there's no scores, there is a program that can get that person financing.
Really? Okay, that's
Mhm.
interesting. Okay,
So
okay.
they'll basically take alternative forms of credit. So if you're paying rent, right? If you can prove that you've paid rent, your utility bills, if you can show that you've been paying on time, we can use those alternative forms of credit to help you get into a home. So again, you don't need to have perfect credit. You don't even need to have credit. And there's still options for you. Now, the one thing I'll add to that, because a lot of people will think, well, if I have a lower credit score, my interest rate is just going to be super high. It's not that big of a difference between someone who has a 580 and call it a 640. A lot of times those types of clients are going to be looking at FHA financing, and FHA financing was developed and built around helping first-time home buyers get into their home. So, there's always the argument, someone will say, well, I'd rather wait and get my credit score up before I buy. But to be honest, a lot of times I've seen people, once you almost detach from the process of buying a house, you're not working on your credit. You're not doing the things you need to do because it's now become an afterthought. So it's almost like if you're in that moment and you can qualify and you can do it and it works for you, why not look at buying a house? There's so many people I've talked to over the years that horror stories. They can buy a house today, but yet they said, well, I don't want to buy it. I'm going to wait. I'm going to work on this. I'm going to pay this off. And then 6 months go by, a year goes by, and then you know what happens? They're not ready to buy. So they end up wasting all this money on rent. And then they just get to a place where they're just almost pigeonholed themselves to not even being able to purchase.
Yeah, it's a situation where you just waited way too long. Like there are, just like you said, let the lender do their job and tell you when you're ready. Because if we think we're not ready, and potentially we can be, then we miss out on a few years ago on that 3% interest rate. We miss out on home prices that were in the 350s. I mean, right now we're like what 455 for the median here in Las Vegas. That potentially can be very unrealistic to a lot of first time home buyers,
Yep.
especially ones with families who are looking to 3 to 4 bedroom range.
And that's why I always try to get people to understand, the interest rate is not the end all be all. I think the media and I think society tries to put so much emphasis on interest rates that they're going to shop around, right? I'm going to shop around for the best rate. Well, you're shopping around for the best rate, and guess what? You end up continuing to rent. So that shopping around did nothing for you, right? If you can get yourself to understand what's the payment on the house, if that payment difference in interest rate is $100 a month, does that $100 really people? Probably not, right? That's eating out an extra probably a couple times a month. Maybe you sacrifice that to have a home instead of throwing away rent for the next 12 months, 24 months. Everybody is situational, and
Mm-hmm.
it's gonna be different for every person. So that's why you really have to do their job, talk to a real estate agent so you can see if I qualify for a $2,000 payment, what does that get me in today's market? And I think that's how you best make the decision, not off the interest rate, because my argument is for everyone that says, well, I want to wait till rates come down, or I want to buy when interest rates are down. Well, why didn't you buy in 21?
Mm-hmm. Yeah. What's stopping it? That
Those were
was
the
that was a good
lowest
thing.
rates in the last 50 years. Why did you not buy then?
And you know what I was getting at that time? Oh, the prices are too high.
There you
Well,
go.
prices continue to be high, and oh, another one that we got also. Oh, the market's going to crash. I know it's going to crash. I like that. I know it's going to crash. And here we are, like, I've been hearing since I started, which, I haven't been in the game long, coming up on 5 years. Since I've started, it was always, oh, my market's going to crash. The market's going to crash. Well, I'm waiting the market crash too. Shoot, I'd like to get me a nice deal. But the
And I think
reality is, go ahead.
I think those are the things that a lot of people, those are like their knee-jerk reactions, right? It's almost like they want to do something, but yet, oh, let me just throw this rebuttal out there. Because even if you were to look at that, I've been doing this almost 20 years. When I look back when I first got into the business when the market crashed, and I'm talking, we were doing loans for houses under $100,000. We were financing condos and townhomes for $30,000, right?
Good old days.
People were still saying, I don't want to buy because home prices are going to go down. What do you mean it's going to go down? We have a 70% off sale, but you don't want to buy. I guarantee you go into the fashion show mall, if there's a 70% off sale at any store, people are spending their money, right? But when it came to houses in 2009, 10, 11, there were people that said, no, there's no way. I'm not going to buy a three-bedroom house for $90,000. You're
And
crazy.
you
It's
know
going to
what?
be worth less.
Yeah, and you know what? It's I heard this once. I can't remember where it's at, but people buy what they want, not what they can afford. And the biggest indicator of that is cell phones to me. Like, people are constantly upgrading their phones, and they're not going and pulling out 12,000, I mean $1,200 out of their pocket paying for the new iPhone. No, no, no. They're putting
Finance
it,
it.
financing a phone. I'm just as guilty, but I don't hop around with phones. Usually I stay until my phone is like on his last leg. But that's a huge thing. Used cars, I mean, used car market. I mean, just look at the used car markets. Why is it so big? Because people wanted to buy those Hellcats, those TRXs, those
Yeah.
Raptors that are $100,000 vehicles that they can finance. Yeah, you can go out and finance it, and your car payment's going to be like $1,200, but it's what you want, right? It's not what you can afford, because if that was the
Yeah.
case, it'd be a lot of people driving around Honda Civics and Camrys more than what I see around town.
Yep. Yeah, and I think you just have to get a game plan together. If the goal is to buy a house, you have to have a plan in place. If you don't have a plan in place, the chances of you really getting across the finish line, yes, it'll happen for most, but for many people, it doesn't. And you
Hmm.
continue to prolong that because you have no plan. It's just like anything in life. If we were going to drive from Vegas to Florida, we would need GPS. We would need
Or old school, when I
GPS
was at least printed out a
or
map. I
MapQuest,
remember those
right? We're
days.
printing it off, but we had a plan on how we're going to get there. And I think for a lot of
Right.
people, there is no plan when it comes to buying a home. And I think that's where they make a lot of mistakes. So, don't I think for people that are watching this, utilize a lender, utilize a real estate agent as a resource. Um, we don't get paid until we close a deal, but if someone doesn't want to take the time to sit with you and kind of walk you through what needs to take place, then maybe they're just not a fit for you. But I think the sooner you
Yeah.
do that, the more successful you can be when it comes to buying a home.
And I think that initial conversation is what is key. Like, don't go in thinking, well, I can't afford a house. Go in thinking, what do I need to afford a house? Thank you for watching part 1 of our 4-part series where we talk to mortgage expert Sean with Geneva Financials. If you'd like to watch the other 3 videos, you can find them on my channel, The Realtor Edgar. And while you're there, please consider subscribing so you don't miss out on anything related to the Las Vegas real estate market. Also, please like the video to help it in the YouTube algorithm so that more people who are looking for real estate advice can find it. Thank you again, and I'll see you on the next one.